From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 12th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Now this week we have start off relatively slow on the news calendar, but as we go into the later part of the week, we get information from the FOMC, the SNB, the Bank of England, and the Bank of Japan. And as always, be sure to use appropriate risk strategies and risk management in all trade setups. Let's go ahead and get started here on the USDCHF, the dollar franc. Looking at the daily time frame, couple of things to think about. We were in a downtrend. You can see that big black trend line coming down from the top. We have been in a downtrend, but we've started to see a shift in that momentum late last week as the market pushed back from the lows, the pink shaded area, into the 96.10.30 level, back above the blue zone, which was our resistance much of last week, back above 96.60, 96.75, sitting on top of that now as support. Let's go ahead and zoom it in on that a little bit, and you can see that area here where the market 1, 2, 3, 4 days was stuck inside of here. We got a little bit of a push above and now sitting on top of that. The blue zone is your main area to focus on this first part of the week. As long as it sits on top of it, we will look for potential support, 96.75, 96.60. Anytime it breaks underneath that blue zone, we could be looking for a return of the downtrend. So we were in a downtrend. We've started to see evidence of either mid or short-term reversal as it has now made a new higher low coming up into the blue zone. So the blue zone is our main area to focus in on. 4-hour time frame, as you can see here, as we get down to the 4 hour, zoom it out a little bit, we are sitting on top of that blue zone right now. So what we're looking for is price action, evidence that the buyers are interested in this currency pair still from last week's rise, and that it will hold here into the blue shaded area, looking for support. Look back here to the left hand side, 96.75. You see support here before, so not too hard to expect. We might see some support here again into this blue shaded area. A rise from here goes back to the yellow zone. Of course, a break of the yellow zone continues that reversal expectation back towards the green zone up here into the 9800 level. And again, your risk at this point is that it gets back under the blue zone, because once it does that, you would expect to fall back down to the pink shaded area, 96.30, for the dollar franc this week. Moving over to the euro dollar, similar yet opposite situation. We've been studying the fact that we're in this little range or congestion zone up here at the top right hand corner of the uptrend. It's an uptrend here. We've been stuck between the pink zone, 1.1200, 1.1165, and the orange zone, 11260 up to 11285. So those are the boundaries right now of the range that this currency pair has been in the uptrend. Let's go ahead and zoom it in a little bit. You can see, of course, the market settled down here into the pink zone. That's a main area to focus in on this week. As long as it's above it, of course, we look for the possibility of this turning back in the direction of the uptrend, targeting back to the orange shaded area again, 1260.85. And of course, above that, we look for the continuation of the uptrend. Reversal would happen if we see the market push under the black trend line, under the pink shaded area, under the 1165 level. We'd look for it to go down. So right now we're kind of range bound. If you're going to trade within the range, you're buying the pink zone or selling the orange zone. Buying the pink zone's in the direction of the trend at least. And then you're looking for the continuation. And of course the risk there is the breakdown of the pink zone for the euro dollar this week. Moving over to the GBPUSD, of course, we saw significant movement out of this currency pair last week as the market fell on election news from last week, fell significantly. We're actually still holding a small portion of the trade we were in prior to the election at 1.2920, sitting currently with 230 pips of profit on that trade. If you were still in that trade, you should be protecting profit at this point, or should have done it last week, if any case. Blue zone, very interesting, coming close to the 100 period moving average here for this currency pair, but the blue zone, 126.54 up to 1.2680 is that blue shaded area. That's our current area for support. Let's go ahead and zoom it in on that, and you can see there's that blue zone. Spiked into it last week, came up back to the orange shaded area, by the way, acting as our resistance. We discussed that in the live trade room. Our risk there was a break back above the orange zone, so our stop loss right now on the current profitable position is locked into profit just above the orange shaded area. Right now we're finding support at the blue shaded area, the blue zone 126.80.55, and of course a breakdown of that blue zone will look for the continuation lower. All three of those pairs, well, specifically the USDCHF has the SNB later on this week. This currency pair, we're looking at the Bank of England monetary policy later on this week as well. So all three of them have the FOMC on Wednesday to concern ourselves with as we go through our week. 4-hour time frame here on the GBP. You can see the congestion here after the fall. Now we're making a new attempt at that blue zone, a breakdown. 26.50. We'll look for the continuation of that fall. Moving over to the USDCAD dollar CAD, again kind of stuck in a range. We have two different trends we've been studying: the blue trend line, the rising trend for much of 2017. Red trend line, our shorter term downtrend. We're kind of stuck right now between the green zone, which is 134.20 up to 1.3445. The yellow zone, 1.3490, 1.3515. We're kind of stuck in there between the red trend line, the falling trend, the blue trend line, the rising trend. Not really much to speak about over the past few weeks except bouncing around inside this area. Let's go ahead and zoom it in on that a little bit. There it is. So the green zone, of course, is our key player right today. We can see that we're there, we're challenging it, that support into that green shaded area. We only expect it to go lower if it breaks through the blue trend line and the green shaded area, which it hasn't done yet. So settle down here and support. If you're looking to buy it, this is probably your best opportunity to do so into this green shaded area. If you're looking to sell it, probably not a great opportunity, because we can see historically this is significant support. We would have to see a significant break of the blue trend line green shaded area before we would look for new short opportunities. So don't go short today unless it breaks the green zone blue trend line. Or, of course, rallying towards the yellow shaded area might give you an opportunity to go short. Of course, there, the risk is to break out above the red trend line and the yellow shaded area. So we're in conflict right now. We're in indecision, really. Watch oil prices as well this week. Whichever oil decides to go, we look for the USCAD to go the exact opposite way. So if you're a seller, don't sell it now. Wait for a rally to the yellow zone or break of the green zone. If you're a buyer looking to speculate on that, then you're looking to buy the green shaded area for the dollar CAD this week. Moving over to the USDJPY, of course, as I mentioned, we have the BOJ coming up later this week. Could be interesting for this currency pair, but we have overall been in a downtrend, except for the fact that last week we saw some significant bullish movement into the resistance zone, the yellow shaded area, and very close to our blue trend line, down trend line here for the dollar yen. Zooming in a couple of times, there it is. You can see the downtrend, but we saw a little bit of a pullback last week coming back towards the yellow zone. Well, I still think 110.30 went down to 110.0. The yellow shaded area is our area to concern ourselves with this week. As long as it's underneath it, I think the downtrend is still the main focus here for this currency pair. And only really if we get above that yellow shaded area would we look for some sort of change above the blue trend line as well. So if you're focusing in on the dollar yen early this week, you're selling underneath 110. You're selling underneath 110, 110.30. You're targeting back to 109.45, 109.20, which is the purple shaded area at the very bottom of the chart. And of course, a break there underneath the 109.20 level in the purple shaded area. You're further down into the mid to upper 1.0 or 108.0s. We're looking down at the orange zone. The risk here is to turn back in the direction opposite of the trend, which is back to the top side above 110.30. Down to the 4-hour really won't change that much. We did see that move above the yellow zone last week, challenge the pink zone. What we're looking for now under the yellow zone is an open and close to increase our confidence that it's going to continue to pressure back down towards the purple shaded area. Take it over to the AUDUSD. Of course, it's been on the rise. We had the black trend line. It was a downtrend, and then we broke through that black trend line. We started looking for opportunities to go long on top of that black trend line over the past couple of weeks. It took the rise all the way into the 75.30, 75.55 level. Yellow shaded area. Very interesting here for this currency pair because we also couple that with the 100 period moving average. So you see the 100 period moving average, yellow shaded area as resistance. 1, 2, 3, 4 days now, today included. We go back the last 3 days of last week and today, 4 days finding resistance, 75.35, 75.55. If anything, let's go ahead and zoom it in here. This is a difficult place to go long and buy this currency pair because we are into resistance. Not too hard to see that. The best place to go long, well, two places to go long, would be first off maybe a dip back down to the orange zone, 75.10, 74.95. Secondly, we would look for the break above the moving average, 100 period moving average, in 75, 50, 55, the top of the yellow zone. So if you're looking to buy this currency pair, a dip to support orange zone, maybe even the green zone, or a break above the yellow zone becomes your opportunity to go long. Of course, your first target above the yellow zone becomes not too far away. The purple zone here is 75.85, 76.05. Now, on the other side of this, if you're looking for opportunities to go short on AUDUSD, you're probably there. I don't think you can get much better here into the yellow shaded area resistance for the last 4 days. 100 period moving average. Your risk is a break above there. In fact, late last week we actually took a short here at 75.30, which is just at the bottom of the yellow shaded area. Held it over the weekend. Nothing extraordinary happening here, but definitely would protect that trade from going extremely negative if you are still holding that from last week. If you're not in it, you have to decide, are we looking at resistance here? Are we going to see a continuation lower? Not really sure yet. There's not much to be a catalyst for this market today. In fact, we have an Australian bank holiday that was scheduled on the calendar. So at least at this point, if you're holding the shorts, you need to evaluate that risk. If you're not, if you're looking for the long, a push above the yellow zone would be the next phase of the uptrend for the Australian dollar. Moving over to the NZDUSD. Similarly, we are in an uptrend here on this currency pair. The blue trend line, not too hard to see that. We were in the downtrend, black trend line, broke above it. We've been moving up ever since. Red circle shows the market pushing through the 100 period moving average, dipping back down to it as support, and then continuation. I point that out because the blue circle up here at the top is a very similar situation, isn't it? It broke above the yellow zone, dipped back down to it, and now making its way back up again. So similar situation between the red circle and the blue circle within the overall uptrend. If you're a buyer, that's not too hard to see then. You want to buy as close as possible to the blue trend line, then the yellow zone. The yellow zone is 71.80 down to 71.60. So that's your best place, lowest risk, highest reward opportunity to buy it. Because if it goes down, if it breaks through the yellow zone, 71.60, we would look for it to go lower, at least to the purple zone, if not back down to the blue zone. And of course, your resistance right now, not too hard to see. The green shaded area is your resistance, 72.20, 72.40, and a continuation of the uptrend happens if we see the break of 72.40 and the top of the green zone. So right now we're in a little period of congestion between the yellow and the green zone. Reversal would be under the yellow zone to go lower. Continuation by the yellow zone, break the green zone in the direction of the trend for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.